Hey guys, I'll try to split these recordings up really quick. Maybe it's the length of the recordings I'm having issues with. But anyway, I want to get this out on GLD. This is the 5-year weekly. Remember, we're trying to get common touches. On the weekly candles, I'm not so concerned. You can use wicks and tails, but you get the basic gist of the channel change directions here. If we go up high in here, then we're going to probably miss these here. So these touches along here do have meaning. These are pivotal changes in direction. You would have had a breakdown here on a longer term, but this was going to continue in a bearish mode. Get the spike up. Then you get a channel retest a couple times here. That channel also becomes the high of this move here, and then you have your outlier directional change. A lot of times gold changes direction at extremes in bearishness or bullishness. So here's your fake, your head fake breakout, and then your breakdown here. So looking at two pivots here that worry me. One is on tails and one's on closes. We're right on the closes. Then we may break through down here and go retest the tail. So we need to see a bounce right up in here. Remember, these are weekly charts. If we get down here, it's going to take a lot out of JNUG. Obviously, the miners in the GLD hard asset ETF don't always move in direct correlation over a short period of time, but over a long period of time, there's no way they move inversely. It's almost impossible. So interesting situation here. I would say that JNUG could get down just under 17. It is a leverage ETF, so to chart it's a little bit tricky, but that's probably an area where I would add, and I don't know if I said that in the original audio that I sent out, and then we can set our stop and our price target from there. It's going to be pulled down from the 21 closer to the 1970, 1980 area. And then once again, using Fibonacci as a tool from this low end area that we saw at the end of last year, 2016, to the height that we saw here. We've already just retraced to 28.6 right here at 123.40, and obviously we're breaking below that. So we're in a gap between the 28.6 and the 38.2, and we're right on that trend line that I showed you. So if we break below there, we could go back and retest that 120, which would not be good. We need to see some strength right here today in GLD or tomorrow. If we don't get it now, I think we could be a little bit vulnerable moving forward over the next few days. We would need it today late at the latest. Hopefully we get it midday. And then just in closing on the GLD, on a monthly chart, you can certainly use wicks and tails. I have no problem with that. I'm looking for a directional change along this line here, and we could draw several charts here. But to pull back and then the breakout there started another leg up. We could use that as an area. Obviously, it looks pretty correlated here to the channel. And then there's also different channels within here you could draw from these pivots where we broke down and see directional changes here as well. And obviously there's one right there, but we're at a crucial level right here. As you can see, we did break above the channel, very bullish on a longer term. Remember, this is a 10-year monthly we're looking at. So we definitely could retrace back to the 120 area. That would be the pivot. That would also line up with the Fibonacci that we talked about, and that would also line up with the lower part just under the channel that we talked about. So interesting action here in GLD, but you can see where we need to hold on a longer term if you want to replicate this chart.